What is revenue? Revenue refers to the total amount of money you earn before any expenses are deducted. For example, if you buy a bale of second-hand clothes, mitumba, for 15,000 Kenyan shillings and sell it for 25,000 Kenyan shillings, your revenue is 25,000 Kenyan shillings. Subtracting your initial capital of 15,000 Kenyan shillings, your gross profit comes to 10,000 Kenyan shillings. Types of revenue. Active income. This includes salaries, business profits, commissions, and wages earned through direct participation. Passive income. Passive income is generated from sources such as rent, interest, dividends, and royalties, often without direct daily involvement. Capital gain income. Capital gains arise from selling assets like land, shares, property, or businesses for a profit. Reflecting on the earlier story, Jane's salary and Mary's egg business are both examples of active income. If Mary earns interest from her SACCO savings, that represents passive income. Should Mary decide to sell her business, the proceeds would be considered capital gain income. Which of these income types could continue, even if Jane or Mary were not physically present? Consider Kevin, who lost his job and spent months feeling as though no opportunities existed. Meanwhile, his neighbor took the initiative to charge phones using a solar panel, earning 500 Kenyan shillings a day by charging 10 Kenyan shillings per phone. Both lived in the same environment, but their mindsets were different. Are there opportunities you might be overlooking? Remember, money follows value. When you solve problems, financial rewards will follow. How do you identify opportunities? To find opportunities, observe your surroundings and ask yourself, what problems exist here? What solutions can you offer? How can you earn from the value you provide or the solutions you deliver? Increasing and diversifying revenue can be achieved through value addition, diversification, and improving your location and visibility. For example, Mary could move her boiled egg business closer to a bus stage with heavier foot traffic and potentially double her earnings. By adding kachumbali to her eggs, Mary increases their value and sells them at higher prices. Similarly, a boda boda rider could diversify by offering delivery services in partnership with online shops. Pricing is another critical aspect of revenue generation. If Mary buys eggs at 20 Kenyan shillings each and spends 7 Kenyan shillings to add value, her total cost is 27 Kenyan shillings per egg. To maximize her profitability while staying competitive, she should aim for a profit margin of 10 to 15% for fast-moving consumer goods and 15 to 30% for value-added products. If Mary chooses a 20% profit margin, her selling price would be 33 Kenyan shillings per egg, resulting in a profit of 6 Kenyan shillings per egg. Pricing should not rely on guesswork. It must cover all costs and include a reasonable profit margin.